and welcome. We all know about ubiquitous banking, but mostly as consumers. But things are changing on the institutional side as well, as more and more countries are introducing 24-hour banking. India might follow soon too. What does this mean to banks, to consumers, to the people who are managing the systems behind, to the technology that has to be brought in to manage it? Well, I'm joined by Thomas Schickler, Global Head of Liquidity and Investment Products, Global Payments and Cash Management at HSBC. Thomas, thank you very much for speaking with us. So tell us, this is, you said Korea, UK, Australia, Singapore in pilot mode have all gone into 24-hour banking, right? And this means that the world is changing, and the way consumers are consuming, the way maybe there's 24-hour transactions happening. What does all this mean, and how is it playing out?
Well, just to clarify, the introduction has been in the space of 24-hour payments. Obviously, things like ATMs have been available on a 24-hour
On the consumer
basis.
side, we've always been, or for a while, we've been experiencing
exactly.
it.
And I think if you step back as to what might be driving it, we need to look at and understand the fact that, you know, consumers' access to banks and payments has changed a lot with the introduction of the internet banking capabilities, as well as the buying habits have changed, right? Whereas historically, people may have depended on going directly into a retail shop, et cetera. Much more retail transactions, albeit maybe not so quickly here in India from an adoption perspective. A lot more retail is done online. And to the extent that more retail is done online, obviously there needs to be a settlement that's taken place. And clearly, not everybody is going to want to make use of, let's say, a credit card or a debit card or some physical element like that. So the ability to transact on a real-time basis has become of increasing importance. As you alluded to, and you think about it, Korea was the first country to introduce 24-hour payments. It's also probably the global leader in terms of percentage of population who have access to internet. I think there's no, there's no surprise there, if you will. More recent adopters, the UK adopted a 24-hour payment model called faster payments. As you referenced, Australia and Singapore have been quick to follow. I think what that means for consumers is another opportunity to safely and securely transact and to meet the expectations of whoever they're buying from. At the same time, what are the implications? For banks, that means a very significant change in terms of the type of infrastructure we need to deploy to meet those needs. Typically, banks operate with infrastructure which is run on a batch, which is an end-of-day process. In a 24-hour payment cycle, it's very different, right? And then you turn the clock a little more forward. What does this mean? And you've seen introductions of this around the world in terms of what about from equity markets or debt markets, the broadening of the trading day? And what is the meaning of day? If people need to transact, be it to settle a equity trade, a foreign exchange trade, or to buy their groceries, the expectations from a settlement perspective are not really going to be that different.
So what are the challenges apart from the logistical ones, which we talked about?
Well, as I mentioned, infrastructure-wise, most of banks' infrastructure has historically been batch-based. Even when you look at some of the real-time gross settlement needs, it's still, most of those could be fulfilled through a series of batch transactions or batch settlements. So I think now we're looking at needing to adopt new technologies and integrate them with our legacy capabilities in order to meet these demands.
But can it all be served with technology, or do you also need more people who are actually looking at maybe, let's say, checks that land at the middle of the night and so on?
Well, hopefully with 24-hour payments, you're not really having too many checks that land at night. But you do pose an interesting question, which is, does the introduction of electronic necessarily create lower demand for people? And I'll give you a recent example. You've probably read a lot about the recent issues in the foreign exchange market. And as a consequence of that, there's going to be a very significant shift for the remaining balance of foreign exchange that's historically been traded offline, meaning via phone, onto electronic systems. Yeah. So you'd automatically expect that you would need much fewer people now. But the reality is you need more people, because you need people now to write algorithms to create the ability to make those trades settle electronically. You need more people in the back office to validate, et cetera. So shift to electronic and shift to 24-hour doesn't necessarily mean fewer people. It just means people doing different things.
So what's the, if you were to spin forward now, what could it mean for countries like India? I mean, both from the challenges of doing it. I mean, I'm only asking this because you're familiar with the Indian system. You've been on the board of the National Payments Corporation of India. So you understand the payments architecture or the infrastructure that we have.
Well, I think one important thing to consider is the fact that payments per se are not strictly the purview of banks anymore. So you look at companies like PayPal, which is part of eBay, right? And they've been quite a fast innovator, if you will, an introducer of people-to-people or peer-to-peer payment solutions. That said, from a regulatory perspective, regulators have a very important role to play. They're concerned about, yes, the enablement of payments, but the safety and security thereof. So they may still have a belief that banks have a key role to play given the relationship that the regulators have with banks and potentially the concerns of other companies. So the thing about an innovator like PayPal is they're so disruptive, they come up with the 24-hour payment solution. If we don't respond, be it the banks and the payment infrastructure, then potentially there may be a shift, if you will, outside. So I think that's one key consideration. I think from a consumer perspective, it opens up a wide range of opportunity. The credit availability throughout all the demographics of India is not widely distributed. Yeah. So giving people secure access to making payments, I think, can actually help grow the retail space.
Right. And tell us, I mean, from a safety and security point of view, and this is more conceptual question and looking ahead. So banking has become more convenient in some ways, but it's also become more complex, and as from a consumer point of view. As let's say the elements of risk and the elements of safety become more and more acute, perhaps in coming days and years, how do you see this whole the sort of the transaction relationship panning out?
Well, I want to come back to a word you used vis-a-vis, for consumers, which was complex. I think our job is to make it easy. I always look at it a simple way. When somebody's explaining a transactional capability to me and it sounds complicated, I kind of get the feeling they don't understand it. And if we're putting the expectation on the consumer to figure us out or our technology, we're not putting it in the right place. And you look at it from an India perspective, it's really critical. Ease is security. I believe. I don't think those two things are in opposition to each other. And in order to bring more people into the banked part of the economy, we do need to make it easy. And that's a key, it's a strategic component of the growth of India, because financial inclusion needs people to be part of the banked community. And that in turn will help accelerate the growth of the economy. So I think it's a strategic issue for India. Right. And I think the introduction of technologies in this space can help the growth of the country.
Right, and inclusion is one of those golden words that everyone likes to hear today, and of course, hopefully see it happen as well. Thomas, thank you very much for speaking with us.
Thanks for your time.
Thank you.